Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Uh, we have a potential interruption that will happen sometime during the stream. I just want to let you know that I will be back as soon as possible, but I'm having some construction work being done here, and I'm going to have to take a little break to tend to some matters about that, but it shouldn't be more than a few minutes. Please be advised. Let's get into it. We've got a interesting day, like every day in this business. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. This is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. If you're in YouTube, there's a link down there if you want to access the community. Also, I want to remind everyone that you do need to verify your Discord email address and also confirm it. This is to eliminate or reduce spam and impersonations. Also, if you're a Bookmap subscriber, you are going to need to confirm your subscription for special webinars and other events that are going to be taking place. I also want to remind everyone that effective this week, if you are not verified, you will not be able to take advantage of the Trader Lab, the tools, the library, the structured trades, and all. And this shouldn't be a surprise. We've been talking about this, and Bookmap. This is how they feel they can bring the best services without the disruptions from phishing and all that. This is to protect the community. So please do this immediately if you haven't done it. If you're not sure how to do it, reach out to Dan P. At Bookmap, and he will guide you. There is a verification link. Also, there should be a link that you can access here in YouTube if you're visiting the stream, and if you want to be able to access the Bookmap Discord Trader Lab chat, plus the resources of the Trader Lab and all the other education. The other part of this is this stream will be continuing starting on Thursday. This stream will be stopping early in the YouTube and will continue live streaming exclusively in the Discord Trader Lab. So please be aware of that. Please take care of it. I know we all have other things to do, but if you want to continue your access to Trader Lab, I request that you take care of this thing. Okay. And remember, in the Trader Lab, you have access to 60 PDFs of these structured trades that you're going to be seeing in the stream. And please remember also that I anticipate being interrupted during the stream, but it'll be brief. Thanks again, guys. Appreciate you your patience with all this, and as usual, welcome again to the Trader Lab. Let's get right into today. Now, of course, we had the holiday weekend, which kind of makes things a little strange, but I do not use holiday data. So from my perspective and from the perspective of the market, we had a short squeeze on Friday, and I always say the market goes up to go down and goes down to go up. Interesting, isn't that? So what did we do on Friday? We went up, squeezed out shorts, and that sets us up for continuation lower. So that is the thinking coming in today. Now, let's talk very briefly about the condition. We sold off in the ETH. We are opening at the ETH low. I don't know about you, but that says to me we might have a problem in River City. The other part is Friday's low was here, and that was open to be tested, plus targets down below. Now, there's a couple of the little pieces we should talk about. Friday's settlement price was here. Friday's highest volume price. Not sure which one of these is right. I think it's this one, but I don't know. 56, 58 possibly. This is one of these is stale. This is not a Bookmap I trade off of. And remember what the stream is about. It's integrating Bookmap order flow tools with auction market theory using the volume profile. So when we think of the market, and if we think of it as an auction, we need to be thinking about how this market works, or any market works. It's a price discovery process. What's too high, what's too low, and what's just right. The thing about just right is in your time frame or fractal, and the market's made up of time frames or fractals. I don't use the clock, so I call them fractals, because the amount of time that took place right here gives us insight based on the order flow. So I don't use a fixed time like a clock. I also don't use any indicators. So what is my indicator? My indicator is really the same as yours in some ways. The difference is mine is real time and it's happening right here. Yours, if it's oscillators, moving averages, whatever it is, pick one, doesn't matter. Anything you're using is somewhat fixed structured. In other words, you're using some kind of math-based interpretation of price and time, or price and volume or something, and it comes wherever that is represented, and however you tweaked or tuned it, that's kind of where it's going to show up. I'm here. That gives me an advantage because I'm using what happens here for triggers and interaction and interpretation. Just something to think about. So this, let's go to RTH Open. And if you have questions, please post them. And again, apologies, I will be interrupted during this stream. So the RTH Open is right above the ETH low. Not so good for the longs. The ETH volume point of control is the retail price or highest volume price from the ETH. So this is like retail. High volume is like when you shop retail. So right here, we know this is too high. So what the idea would be, if we open and we rotate up, is to be looking to lean on a test of this. And then we can, if we take it out, we can go higher. And if we don't take it out, we can head south of the border. Also, there's a high probability we're going to take the ETH low out. So setting up, coming in, we are leaning to the short side. Now, how do you get on the short side? This is part of the joy. So now I'm going to take you into the open, and I'm going to go fast here because I'm going to be interrupted, and it could happen at any minute. So, and that's just the nature of good luck and bad timing. Fortunately, I'm having a contractor here today, and I think they are just arriving, so that makes things fun. So let me try to get things going. So market opens here, move high, move low, swing high, swing low. So what this is here, and this is a structured trade, but it's advanced process. This is developing volume point of control. And what this is measure, and it starts at 0 at RTH Open. So it's measuring the volume as it comes in. So market's going up, going down. Where's the volume, right? So right in here, and remember, what I'm looking for is a potential test here. So this is a very aggressive trade to get involved in here. So I don't have anything here. What I have is variable high volume node here. So this is your high price. Now I'm going to show this to you. I think it's rather aggressive. And I always suggest in Trader Lab that this is not where traders start. This is where traders start narrating to develop unconscious consciousness, not to actually trade. So the variable high volume node is here. Market rotates up. I'm testing these buyers here. I had sell icebergs. Market breaks down. This now is resistance. This is my opening swing high. We always want to label the opening swing high. Why? Because there's going to be stops there from early sellers. And the same thing for early buyers. So I have resistance, resistance. Here's another thing I see. My sellers are here. This is absorption. And I think my interruption is here. Sorry about that, guys. I'm going to put up the, that you please verify. I will be gone about 5 minutes, and I have no choice. I have to do this. Please forgive me. I will be back. All right, guys. Sorry about that. Um, Timing is always, they say, everything in trading and in life. Hope you take this chance to verify your subscription. Also, if you are not a current Bookmap subscriber, I encourage you to get the free digital version of Bookmap. So you'll be able to attend special events. Doesn't cost you anything for that, and there is a link in the bottom of YouTube. Thanks again. So, got to get my breath. If you have questions, by the way, please post them in the Bookmap Discord Trader Lab chat. Also, in the Bookmap YouTube channel. Okay, guys. So we have our opening swing high. This is our developing volume point of control. This rotation is an auction. It's called an open auction. Now, we have our opening swing. Oh, low. Opening swing high. Flipping in the turns here. And at the moment, our opening swing low. This has a high probability. So let's see what happens here. Okay. So right here, so this is our opening swing high. We break low. This, here, let me just show you how this works. And this is our retail price. So chop, chop. So right here, I'm looking for ETH, volume point of control, and I'm looking for this. So this is our first target for a short. But the market can squeeze up before it goes down. That's what we know. So now we get our seller. So right here, you get your break. So this is a possible short. It's not one for me because I need it to rotate. So it takes out the ETH low. Now we come up and we take out our opening swing high. So you get your shorts in, market goes higher, squeezes. Now I'm looking for this. I'm looking for it to continue higher to test this. I get my opening swing high. Right here, I see exhaustion. This is the stop and iceberg detector. We come up, there's exhaustion. Now I'm still looking for this. This has a high probability statistic, and statistics are available to all of you in the Bookmap Discord Trader Lab. You can use the link in the bottom of YouTube to access it. So I see my seller, my exhaustion, I should say. This is absorption. Now I don't know it's absorption. I see icebergs. I see exhaustion. This is the stop and iceberg detector. And what I like about this, not only the insight, but I can see when I see delta and I see the market going higher and I see 32 buy stops here, and then the market goes higher. I see buy delta, but I only have 5. That's divergence. So that's the only thing I use from indicator world, divergence. Because from the market to go higher, I need stops because they become buyers, market orders, buy stops, and I need new buyers. Well, if I don't have buyers and I'm running out of buy stops, which is buyers, then it's what's happening right here. Well, the order flow, and it doesn't tell me in advance. To me, it's a suspect. But why, when I have delta, which is aggressors, does the market not go higher? It's because there's a passive side to this. And the passive side is absorbing the buyers. So if we run out of buyers and the passive guys on this side that you can't see, except they're over here, are reloading and taking on the buyers. If the buyers fail, then we're going to break away from it. So right here, I have micro high volume. Let's just look at the behavior. Market breaks. Now, VPOC migration. This says this is too high. Market pulls back, so this is too high. This is now our retail price. Market rotates up to the VWAP. This sets up a potential mid VWAP to VPOC and continuation trade. So actually have not been a lot of trades today because they've been really large range trades. So I've only had a couple of trades. So let's look at this. So this is too high. I got to label this. That's a variable high volume node. Now what this is now, if this is the retail price, and it's basically showing this is where the highest volume is, and there's a couple other pieces too. This is a retail price up here. In other words, highest volume, and you can see it by the yellow line. When you fall in, the way it works with the volume profile, if you fall out of a distribution or a consolidation, same difference, and this was the high volume price or retail, and now the participants are not willing to pay it, we can start a new distribution or consolidation. Out here is something we call a low volume node. We're going to label it, and all it is, it shows us the separation between consolidations. That's what a low volume node is. And they're swing highs. So outside edges of consolidations, where the low volume is if we come out there, there's going to be stops there. But it's like a border, but we can pop into it and then reject it and then rotate. So that creates a condition. So let's assume the condition currently is trend down. And then if we come across this, then it sets up outside in or mean reversion trading. So we're always, put it this way, unless you're a counter trend trader, the better way, subject to your plan, is to trade with the advancing army, not get involved in a counterattack. Kind of think of it this way. You know, so if the army is advancing and the long army is retreating, and occasionally there's a counterattack or counter rotation and a short squeeze, when you run out of the squeeze, you continue in the direction of the trend. So this sets up, these are all short opportunities here. This is a potential short here. This is this crosses over. There's no short. This is outside in. These are mean reversion trades. This market's in a hurry to get sold. We have our report 9 a.m. Let's see. I did not have a lot of trades today because they're just big trades. You know, you don't need a lot of trades, guys. You need actually to have a trade plan. It's not frequency of trading. You're not here to keep busy. You're here to wait for a trade that you have vetted. You have a plan, and when the trade shows up, your job is to just put the trade on. The idea of having a vetted trade plan is that you're anticipating the trades. You're not making them up. You're making them up. You're just sitting in the casino, and unfortunately, you don't have the edge. So this is too high. We break away from this consolidation. Now we have another one developing here. So let's label this one. You'll see. So right here, this is a consolidation. It is in here. So the way this tends to work is chop, chop, chop. This is a consolidation. You can see the high volume to the right. This is the consolidation. There's the high volume right there. We break, we test it. If it's too high, we go low. We sell off. This is a potential short in the trader lab. If it's not part of your plan, it's nothing to do. I'm just mentioning it to you. Outside edges here. There is the trigger. I just grabbed this one out of thin air. when you do this, you need to know where you are, where you're trying to go. So this is what the structure looks like. It's chop, chop, chop. This is a consolidation, and this is what this looks like. It's right here. Chop, chop, chop. Volume is there. When you break low, you come back to the volume. It's a potential short here, or if you don't sell it there, which is the better place, with your stop here, you have another place to sell it here. But your stop needs to be here. It's still palatable for me. But I find the better way to do these things is to try to get it here. Let's look here. Huh. What do you think, guys? What does the market tend to do? It tends to come back and test. So if we're outside, so break, test, shorts, shorts, come back here. Same trade, test. Let's look at the micro structure. I'm going to take you down another fractal. I trade, and one of the ways to do this is to trade inside of itself. So as you go down in time frame, so we're leaning against this. Now, where's our trigger here? Let's try to see if we can see it. Where's the volume? In this structure, the volume is here. I'm drawing these boxes to help you see what it looks like. You can see where the outside edge is over here, here. So what I'm doing is I'm using consolidations, price action, in alignment with the chassis, and now I'm using the order flow. See the order flow up here, I see the buyers. Okay, 625 buy stops. Gee, that's exciting. And I see my buyers. Now, you would think it's going to keep going, wouldn't you? Because that's what I would think. But what I know is when I'm seeing these buyers and I don't go, then I'm waiting because I'm going, is that absorption? I have 620 buy stops. What do you see over here? One buy stop and selling iceberg. So these buyers are being absorbed. There is stop divergence. I mentioned it earlier. And there's my trigger in the Trader Lab. There's my test. Now, nobody, it's up to you how you want to work this. You can put a limit order a couple ticks ahead of this, up to you, and a stop here. Most of us who have not accepted randomness want certainty. The certainty might mean you don't get in until down here, and now your stop has to be out here, and your risk is greater. Do you do better with less risk, willing to always take a stop? Because if you waited for certainty and you got short here, you could just as well get stopped over here. Or you get in here and you get stopped over here. Which is better? This is part of the vetting process. It's harder to do this, but typically the things that are difficult are the things that are better. So this is still your short. Let's watch some more. So you see where it all is, okay? And at 9:30 Central Time, we have the IB stat. There's over a 90% probability we'll take out the first hour's high or low. Considering the way things are running, first hour is low. Now, and the market's selling off. Now, the other part of this is we have another structured trade here. It's called the IB continuation trade. Before I go into that, we have questions. Yeah, Justin, I don't know how to do that. Send support a ticket or maybe post in the Trader Lab. I really can't help you with that. Justin's asking about drawing tools. So let's talk about the next trade. So we take out the IB at 9:30. Now we have our next structured trade is called the IB continuation trade. Now what this means is if we once we break this at 9:30 Central Time, my time, and we pull back in, then we're looking for a short continuation trade. Now there's another piece. The low volume node is there, remember? So we are now below it. Now the next trade is here. Now let's try to find it. So we know we have the IB continuation trade. So now we have to look at the last consolidation, which is right here, microstructure. You see the high volume right there. So this is your volume. Now, the way I look at these is a consolidation is an auction. This is an auction, and we broke low. You can see structure wherever you want to find it. You can find it here. So this is the volume here. There's your trigger. Here's your pullback. If this is too high, we break away from it. Here's your volume here. Basically what it did is broke high, tested this, too high, south of the border. Now what do I know? Let's look at the structure again. What's this? Same thing, too high. Now I don't know. This is resistance, this is resistance, this is all resistance. This is resistance. So I have no clue. This is my outside edge. I have the IB continuation trade. So let's just try to see if we can make some sense out of all this. So it comes out. Now let's assume we don't know that this little microstructure was here. It's not that important. This is what's important because this is an outside edge of a distribution. So comes up, seller, buyer. Now, why not here? You see? Why not here? Well, let's assume we don't know. So it could just keep going. Okay, let's see if we see a change in behavior. Here is your change in behavior. So we don't have anything to do there. We have volume here. You could see it there. So let's watch. What is this, guys? Short. So what do we know? Now this we didn't know. Now, so this no clue. But once you have this volume and you get your seller, you see the change in behavior, then you're looking at selling this and your stop needs to be here. That's very palatable trade for me. And this is the IB continuation trade. Notice where else we come back. So you've got your volume there, there. This was too high. You break here. You could be selling against this. Your stop needs to be here or over here, and you can put it here. It's all up to you in your trade plan. You get risk neutral. You put your helmet on. Now, is everybody tracking? Are you guys with me? By the way, guys, if you're visiting in YouTube, remember you need to verify your account in Discord in order to access the Trader Lab, the resources of the Trader Lab, statistics, the library, the 60 PDFs of structured trades. That's going to be required. Also, if you have a subscription to Bookmap, you need to confirm that. I'm going to be, these streams are going to be limited going forward. They will be taking place here on YouTube, and then live narration will be continuing exclusively in the Bookmap Discord Trader Lab. And if you want to attend those real-time narrations, you do need to have your subscription confirmed. or at least your Discord confirmed at the moment. There is also a free digital version of Bookmap, by the way, which I think you might find fun. So, and we need to take care of that. We've been getting phishing, impersonators. It's one thing when you look, you see somebody using your username and interacting, an imposter. We just can't allow that. We have to protect the community. So that's kind of where we're coming from with that. I hope you understand. So now this, this is what it is. We don't know what that is in the sense of that it's coming, except it's a short squeeze. So the way I manage my trades, well, I trade the targets. That's one thing. And this is actually 80 was a target. So my trade is over at 80. So I'm out of this. But let's assume you had a runner. I'm going to show you at least what I do. And I'm not saying it's good. You guys, I'm sure, could do a lot better. Notice the volume here in the structure. So what I use is consolidations because I view them as auctions. This chop, chop, chop thing is really a microstructure. And they all act the same way. If that's too high, we leave it. Now we have another little one here. We leave it. We have one down here. We break high. So we're under this one. We come up and check it. So here, the teeth would chatter. Here is resistance. Here now is the volume. I break low. This is resistance. Resistance. Going to zero, right? What do I see here? Now, I have no idea, like where, you see absorption here. So, and that's this liquidity. So I see buyers here. I see buy icebergs. So when I start seeing absorption, I do pay attention. The thing about it is icebergs and other participants, they don't have the same agenda as we do. So we don't know why they're doing anything. Are they covering? Do they think this is a great place to get long? But this is a change. I don't see, sure, there's icebergs around here, but this was some pretty good absorption. So that's the green boxes. And I have sell stops coming out. I see absorption here. So I'm now seeing a change in behavior. I'm seeing some more buy icebergs. Now I still got sell icebergs, so there's two sides always, right? So I don't know enough to know what is going to happen. That's not part of trading because we know we don't know. So this, boom, too high, break low. Now right here, this is really the last spot. Break low. Now if you want, this is too high because you see the reaction to it. We had sellers below and there's absorption. If you want, you could put your stop above here, wherever you want to put it. So it's either there or here, you get here and you get a seller. What do we test? There. This is how I use microstructure. So right here, it comes up. Right here, you see the test. You could be out of it here or you're still holding it, who knows? And then you get this. So let's look. Now we come back and we slice above. This is the developing volume point of control. It moves down. That is saying this is the new retail price. Now there's two things that can happen. We can come up here, bounce off it and continue lower. One possibility. However, the market is short, I think. And when I was looking at this, I was thinking to myself, the better trade here is outside in, mean reversion. So we're in a downtrend. So the idea is if we come outside to take a short. Notice what we have here, our low volume node. That's our outside edge. Remember what that tells us. It tells us this was too high. I'm not paying that. We leave. Now we have this. And then we have another one down here. Another low volume zone here, which is represented by the top of this consolidation. So I'm taking this and I'm breaking apart the pieces into components. So I'm isolating the consolidations. When I break out of this consolidation here and I come back across the high volume here, it sets up something called mean reversion, which means I can rotate outside somewhere. That's part of the joy. Come back here and then come back here. So either this or out here and then through this and then out the bottom, which would set this up as a potential target. So that's kind of what we got right now. And also I have another structured trade in the Trader Lab, potentially mid or VWAP to VPOC. So I posted in the Trader Lab, I said, guys, what are the next trades? So it was mean reversion or this to this. So that's what we have, structured trade. So let's see how they set up. Now remember, these lines are drawn from way over there. So what do I get? Outside into resistance, into the low volume area, outside edge. Right here, I see my seller. So this is my area to attempt to sell. Are you guys tracking? Low volume node. Here, can't do anything. Runs away. What do I know? Too high. What do I see here? Seller. Trigger. Where's the volume? It's right in here. It comes back. What do I see here? Now, this I cannot get into. FOMO, raging, lunatic at the helm. That's Hyde, who wants to, oh, I don't want to miss it. That has nothing to do with trading, by the way, guys. It has to do with our wiring. Not part of trading, part of what takes us out of the business because we cannot control our emotions. Fight or flight. So this is the fight thing. The flight thing is where you bail out of a trade when it moves 3 ticks against you. That's all wiring. So that's the saber-toothed tiger. I'm out of here. Yeah. Or a stop, same as your mind and your emotional wiring recognizes that the same as the saber-toothed tiger. Stop, saber-toothed tiger, they're interchangeable. So we come back, we check the volume. What else can we tell about this volume? Buyers got absorbed here. Selling icebergs were here. The sellers took over very nicely. If we come back to that volume where my buyers got absorbed, and there's my selling iceberg, and there's my stop divergence, and they get absorbed again, what do I want to do? I want to sell it. Comes up here. What happens here? I want to sell it. These are all shorts. And then I need to scale here and then hold. I took this one, got a scale, trail to stop. I got taken out on the trailer, not a problem. I come up here. I'm further outside. Remember, these are outside edges. What do I get over here? Chop, chop, chop. Micro high volume. There it is. In alignment. Break. Pull back. This is a short. Where are we here? Same trade. This is the same trade. So this is outside in. You get the squeeze. We come back out here. It's still mean reversion. It's outside in trading. This is only shorts, only outside trades. So there have not been a lot of trades today, but there have been terrific trades as far as range. So I hope if you're in Trader Lab, I hope you're having a good day following the structured trades. How are you guys doing? And how are we doing in YouTube? Hope you're finding this interesting. Chris, no, dark pools are not. I don't see dark pools in here. I watch order flow. Um, I certainly don't need any of that information for me. Uh, it's almost like, what is somebody going to do? Where are they going to do it? In futures, not so much. There's absorption. Sellers met these buyers here, selling icebergs. Sellers are here. These buyers were absorbed by the sellers. So it's pretty urgent selling here. You got some buying over here, some light buying icebergs, but the trend is down. This is our next target, not a trade recommendation. And I see what else we got down here. Well, maybe even here. So these are potential opportunities, and all you'd be doing is managing your trade, or you're trading to fixed targets. That's certainly up to your trade plan. This is the next potential target, not a recommendation. Justin, as far as the point of control goes, yeah, the point of control is very important because that's where the highest volume is. So, and the thing about, so this is our next area to observe for targeting. It's not a recommendation. So I don't know how many of these you need. These are like 15-point trades. There's been a bunch of these. So, Trader Lab is really, it's not a scalping process because we all take stops. I found, even though I used to be a high volume trader many years ago, I found that you only have so much cognitive focus over many hours. Also, if you know where your trades are, you're waiting for them. And that's what we do in Trader Lab. You wait. And now sometimes it's very active in Trader Lab and other times it's not. I have, in the Trader Lab library, I have streams that are up to almost 5 hours long of real-time narration. Pretty darn active, you know. And then the activity is not a function of what we choose to do. The activity is a function of the structured trades that show up. Sometimes there's a lot of them, just nature of the market. What the market offers is what we need to be prepared to participate in. That's really the job of a trader. And when there's no trade, there's nothing to do. For me, there's no trade other than the ones I've showed you. And there aren't that many, maybe 4 or 5 of them, I think, today. But it's a phenomenal day, you know? So I think the goal in trading is not to play a video game, but to have a profitable business. So it's about crafting a business. And this business is really built on top of auction market theory, how the market works, using a volume profile for structure. Think of it like a chassis, structured trades, and then order flow to get as close as you can into the nuance of the participant behavior. This is where all these pieces come together for timely execution and reading this. I don't use candles. I don't use any of that. I don't use time. I'm using this. I can look at this. Now, I don't know what's going to happen. That doesn't change. We're all in the I don't know zone. It's the maybe zone. But I know if I see buyers here and they're not raising, and then I see a seller here, this could be a short here if it's part of your plan. Notice the high volume. So you could actually develop and be as active as you want to be, subject to how you can operate in different time frames or fractals. So if you are adept at this, you will see this low volume node out here. When we break below it and we pull back to this outside edge, we are now doing mean reversion. It's the same process that we were doing above here, because these are fractals. Coming back here is the same as coming out here, come back to the volume that's right there. But the range is much tighter, you see. If you understand the trend is down, you may choose, if you have an edge in this is what you have to figure out, that you can actually trade this. And then it's more scalpy oriented, you see. So that might not be your trade, but it might be somebody else's trade. But in order to do this, you need to be able to do it in a higher time frame for bigger rotations. As you get more adept at reading in real time, you can actually trade this stuff. Here's your microstructure. You see it? Look to the right. You see the high volume node. The micro high volume is there, right in the middle of that arrow. That break here, break test of this is a short. This is a short, if you can read order flow, because you got your buyer here. They are absorbed. So I know that when I come back, I don't have a buyer here. I got my buyer there, and there is my sellers. When I test these sellers here, this buyer, I get nothing. This is a short. This could be a short. Stop would be over here, but this is more scalping. Not encouraging anybody to do this. If you remember, if you cannot do the broad stroke, you can't get into the shorter time frame. It requires a lot more advanced recognition. And the way I think of this process that I do and that I share in Trader Lab is it's a language of the market. It is not an indicator. It's basically the rawest, purest form of market behavior. It's actually being in alignment in real time with the behavior. So if I can read and understand what is happening here, which is what this is about, I understand the language, I can activate here. I can sell here. I'm not waiting for something to get me in down. I mean, I can't. I need to be in here so I have my risk managed. Then I'm going to get risk neutral. And because of timely execution, which is what the order flow helps me with, I then can get risk neutral and my stop can stay here. If the market comes back and takes me out, I scratch the trade and my broker sends me a gift basket. Remember, our target is here, right? And this is just one of many. It's kind of like on the food chain. It's the next layer. If I get through here, I go here. That's about it. It's not much deeper than that. So this and this. And that doesn't mean it's the low of the day. I have no clue. I mean, we're pretty much there. So that might be the low of the day. My job is not to pick the low of the day. I don't have that skill. What I do is I get in alignment as best I can. I put my trade on. I manage my risk. I manage my trade. I trade the targets, which doesn't mean that's what you should do. It's just one way to do it. The thing is, when you're in a random environment, it helps to know where locations are of potential behavior. Do you think that might help you? How are we doing in YouTube? Guys, please give a thumb up if you're in YouTube and you're visiting Trader Lab today. Also, there's a link in the bottom of YouTube. You can click the link. It'll take you to the Bookmap Discord server. You need to verify, who you are, so we can make sure you're not a bot or something else. And you could then visit the Bookmap Discord Trader Lab community. It is a community of like-minded traders who come together to leverage their collective experience. This is about building a business. This is about the business of trading. This is not the latest thing, the only thing you need. No, you can get that everywhere else. It's all over the internet. There's a bazillion gurus out there. I'm not one of them. I've just been trading going on 45 years. And I think I can, maybe save you a little time and some brain damage as far as sharing you what I perceive to be the straight oil from the can. I've been there, done that. If you've done it, I've probably done it. I've just did it longer. And I also did it when we didn't have technical analysis. It was just brand new. I shared an office with George Lane. He created stochastics. So I've been there from the beginning and been down every dead end and place where I got excited, thought I had it, and then it would break down. And I was always chasing the market from behind. I was always using indicators and trying to get them to work, and then more indicators, more certainty. And it was all predicated on my need to be right, my need to avoid pain, my need not to lose. So the decisions we make are based on psychological needs, not necessarily not necessarily market mechanics. It's based on our belief. And our beliefs are built on top of our primal wiring, which is not to get eaten by the saber-toothed tiger. And that means get rid of uncertainty, become more certain. It's logical. The problem with that is it doesn't fit the business of trading. Casinos are in the same business we're in. They play structured games that have a statistical edge. They don't use variable inputs. That's the differentiator. We use multiple inputs, multiple indicators, multiple time frames, and then we're continually trying to fix them because they don't work. That's the problem. They break down, they break down. And I found the same thing when I went to system design. I had trading systems, I built systems. And when I was a money manager, I was trading across a lot of asset classes. So I needed a system to handle it for me. And I had the same problem. So even though I was doing optimizations, and ultimately the term is curve fitting. You're doing the same thing if you're tuning and tweaking. I call it Trader Groundhog Day. I did a webinar on it. And the point of that is, why would we run into that? Because our goal, of course, is to make things better and to, of course, winning trades. But also our goal is more predictability. That's a different issue. The casinos only play games that have a statistical edge. They cannot predict the cards coming out of the deck or how the gamblers play the cards. They're in an uncertain environment just like we are. So same environment. The difference is the games. The games they play are fixed. They only play the games exactly the same way, no matter the outcome. And they do pay the gamblers and all that happens, right? We are in the same business, but we don't play the game the same way. We are actually trying to fix the game. Maybe the way to fix the game is to acknowledge what the game is we're playing and only use structured trades that you vetted that have a statistical edge. They don't change blackjack from 7 cards to 10 because somebody walks out with cash. We do, right? So we have a business model that's proven, and that is gaming. So in the Trader Lab, it's taking a proven business model, gaming, extrapolating that to trading and approaching it the same way. Not only how you interact with the other participants, which is structured games or structured trades, but also understanding and acknowledging when you run a business, you have overhead and costs of production. You got to pay the bills. You got to pay the gamblers. That's the way the business works. And we're wired to make it something different, but that's not what this business is. Trader Lab is focused on what the business is, not what we want it to be. And we all can spend a lot of time and maybe run out of time and resources trying to make the business something we imagine it to be when maybe that's not what it is. So maybe if you're waking up with Trader Groundhog Day, which is basically doing the same thing, getting the aha moment, going back, tuning, tweaking, so you get that next 20-point swing and you get it, but in between you're losing. And when the dust settles, even though you curve fitted to get the big move, you're still losing. You're on your way out of business. So then you tune and tweak and you're kind of replicating a process that's always breaking down. Ultimately, that's what retail traders do. And we know the failure rate is extremely high with that process. So the question becomes, are you going to keep doing it or maybe learn from it? We all pay to learn. We all go to school, if you will. Education. We get a trader education. But most of us keep repeating the class. We don't have to repeat the class. We need to extract what we can from our experience. And then you need to sit down and have a talk with yourself and say, am I actually making progress or am I just in a circle? Waking up with Trader Groundhog Day. And that's what Trader Groundhog Day is about. I want to point that out to you because that's what most of us have gone through. I did it. Even when I was managing money, I went through it. I tried to fix it with trading systems and optimization. Think of it as indicators on steroids. So if we learn from our experiences, now the thing to do is, can you get a yield off the dollars and time you have sunk into this business? And maybe it has nothing to do with your intention or your effort. Maybe if you're having a challenge and you're not consistently profitable, maybe it's process. Nothing to do with you. It just has to do with a belief that may not be in alignment. There's some liquidity. There's absorption. Let's see what happens here. Now, so far, this thing's going south of the border, right? However, we can counter rotate. Let's watch this right here. We have our micro high volume consolidation right here. Let's look at the volume. And we're going to use this micro volume in order to manage the trade if we were sitting short. Remember, So this is a consolidation, chop, chop, chop. This is a low volume node in the microstructure. It's the same as this. This is the developing daily time frame. The low volume node is there, outside edge of this consolidation. In fact, I'm going to put a little box around this thing for you so you can see it. Because the more you can visualize this, I think the easier it is. So you could see chop, 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 break, test, chop, chop, chop. Same thing as here. If we come across here, then this trade is over because the outside edge is here. So this is too high. This is a consolidation. If we come across it, then we're going to squeeze these guys out and the short would be over. Not a trade recommendation. So we're going to watch this. And then we have this also. So let's watch where we come. So what do we know? Wait, let me get this over here. So these are consolidations, break, test, potential continuation, trade, or not, or trade management process. High volumes now in here. This is the outside edge, the low volume node in the microstructure. So this is what you got going on. So if this is too high, we come across here and I can come under here, we keep going. If I find there's absorption here, you see these sellers? That tells me that there's buyers, of course, on the other side. So, and it's these icebergs. So right here, are they going to absorb the sellers down here and then we squeeze out the shorts? Or once these guys fill, are we going to continue lower to the next area? I forget, targets are here and then here, and who knows? Part of the joy of trading, randomness, guys. But this is a way. So what I'm doing is I'm using multiple pieces here. I'm using the developing volume profile, which shows me consolidations, outside edges. I'm not paying that. Yeah, but it's on sale. And then we auction. And then if this high volume is too high, we leave it. Now we start in the next location. I'm not paying that. Yeah, but it's on sale. Volume retail is here. If this retail price is too high and this is too high and I break below, then I can keep going. If I can't get below here and I come back across this, then the short's over. It's a simple trade management process. This is not complicated. I know early on when I started trading, I was thinking that somehow in the complexity was the secret, that I was going to find what nobody else saw. Now, the difference was when I started doing this, technical analysis, at least indicator based, was really new. So I had an advantage over other traders because I had CQG, I had a really state of the art platform. But then more and more people got indicators and all that kind of stuff, and it kind of neutralized it. So what looked like I really had something good started as more people started using the tools and they came into the retail space. It just became less useful. But I didn't know that. Notice the behavior. This is how order flow is helping me. I don't know what will happen. It allows me to anticipate this. Now, right here, I have a choice. When I see this and I'm coming across this volume, I can bail out here because I know now there's stops sitting here and that there's probably going to get squeezed, or I can just keep my stop back here. All this is trade plan because I can still come out here. I think, of course, at this point, with this absorption, that there's a pretty good shot we're going to do some squeezing. But that's a guess because nobody knows. Remember how casinos operate. I don't know. You should write that down. You don't know. Because that's the only thing that's sure, is we don't know. We are operating in an environment of uncertainty. And that is very difficult for us because we We're wired for certainty, not uncertainty. We don't like uncertainty. We're uncomfortable with it. Uncertainty means danger as far as how we translate it psychologically and emotionally. So the danger we want to avoid danger based on our primal wiring, so that we're always pushing against what's in our best interest in trading, because responding to the fear is not in our best interest. We need to have a process or a plan that we follow. That is really how this works. Does that make sense? Justin, sweeps. Well, a sweep is really where they just go through all the resting limit orders there that are there. They clean the book out. Um, that's really what it is. It doesn't mean it kind of depends where it happens, when it happens. So there's no straight answer to that. But there's loads of. If you go to bookmap.com, you can look up all of these things and see examples of sweeps, absorption, and what each of them means. It's really the best way to do it, is so you can get a good understanding. The Bookmap knowledge base covers these things in detail. I'll tell you, the education that Bookmap has is just amazing. I mean, you can find out just about anything you want when it comes to order flow, and also how to use a high tier tool like Bookmap, with loads of examples, not to mention what I do here in the stream and other educators that are available to you. All this is available at no cost. And I got to remind everybody, you do need to verify if you're in Discord or you want to visit the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. You do need to verify your email in order to have access to Trader Lab and the streams I'll be doing in Trader Lab starting Thursday. So if you're not verified, you won't be able to attend those. I apologize for that, but it's to reduce spam and impersonators and that kind of thing. So we do need that. Also, if you have a Bookmap subscription, you need to verify that also, because there's going to be Bookmap specific education and webinars, and you will be required to have a subscription. Now, how do you get a subscription, right? Well, there's a link in the bottom of YouTube, and you can get a free subscription. The digital version, it comes with data. You can have a subscription. That's all you need. If you have a Schwab or a TOS subscription to Bookmap, you need to have the digital version also, so you can register and continue to have access to the Trader Lab and the Trader Lab resources. So take care of that sooner than later. Starting Thursday, this stream on YouTube will go for about an hour, and then it will continue specifically in the Bookmap Discord Trader Lab channel. So you'll need that and to be verified in order to have access to the Trader Lab, the resources, the PDFs of the structured trades. There's 60 of them, 60 PDFs, and the library of webinars in the community. So I hope you'll do that. Hate to see you miss out, especially if you're getting something of value. Here is very quickly what you need to be looking at. I'll just leave it up here for a moment. And if you're not a subscriber, go to bookmap.com, get a free subscription. So this is what you need to do. So if you're a Bookmap subscriber, you need to use the email that you use for your subscription. And just verify. You go to Bookmap Discord, Trader Lab. You'll see a verify link in there. And there's also in YouTube if you want to take advantage of it. And I encourage you to do that. Nobody likes these administrative things. I got to tell you, I don't. But when it comes to education, I think I've never seen a company do what Bookmap does as far as education, trader education, and it's all available at no cost. So in order to be able to do that, we have to keep the channels and the server, Bookmap server, free of spam and all those other nasty things that we're all familiar with. Back out towards the low volume, the outside edge, back to a location. Exhaustion, there's stop divergence. I see my sellers take over. So let's watch out here. So here's an outside edge. So there's no precision in this. So we want to watch this. Let me make sure what we got going on here. So I'm leaning against this. So where did I come? Here. Potential short is in here. Not a recommendation. Now we can always squeeze out and take stops. This is part of trading. Remember, the casinos pay the gamblers. Also, it is lunchtime, and often, make a note of this, often at lunchtime we see counter rotations. Market thins out. I built, in one of my trading system setups, I designed, and this is going back to the mid-'80s, it was designed actually for this time of day, because when the market would thin out, the algos, well, we didn't have algos, I should say the floor traders at the time, they would be able to move the market around more, because there was less in the book. And so this sets up a potential counter rotation for the short. And all you do with this is more scalpy, because this is a target down here. So we may be done for now, or we're going to take it out and go down to the next target. If we know we don't know that, then the thing to do is be looking at previous behaviors. Too high, too low, too high, break away. If you come back to it, you're going to check it. That's what this is. This is a structured trade. It's advanced, but it's a structured trade. Where would you try to go then? Back here. Why? Because if this is too high in here, what was too low? Here. So if you get short here, you're trying to go here. So you would scale ahead of it, and then you hold. Does that make sense, guys? Can you see the structure? Kyleton, if you're getting a little abused today, then slow down. Everybody remember, if you're going to be a trader, you should only be interacting when you have a statistical edge and you understand exactly where you are. Otherwise, your job is not to participate, but to protect yourself and preserve capital. You can always improve your trading and learn new tricks. So this is a short to Trader Lab, again, advanced. It's only advanced in the sense of you being able to understand what's going on. It's not advanced as far as concept. What I do, anybody can do if you learn it. And it takes time. That's the thing. Everybody, if you're in a hurry and you're sitting here and you're stimulated, it's a dopamine fix. It is not the business of trading. I can assure you the dealers in Las Vegas are not getting a thrill out of dealing the cards. They're just dealing the cards. And that's it. There's no dopamine. We are seeking dopamine. And there's all these things we have to understand about ourselves in order to master this business. We are the dealer and we're the casino. We're all those things at the same time. We only want to play games that have an edge. And we need to be patient. And we all take stops. One of the things I find, at least, is if let's just say I put it on here. And I take a stop right here. My stop would be here. If I put it on here, I take a stop. I put this trade on again right here. I do that because I take stops. And I don't get too disturbed. I get frustrated. That's emotional. But I don't get disturbed. I've already accepted that precision does not exist in this business. You guys should write that down. Nobody knows. If nobody else does, you can't either. What do we know? We know we don't know. We are continually in an uncertain environment. That is an issue for us because of our psychology. You need to know that. You need to design and plan for it. You need a trade plan. When I sit down to trade, I have to put my brain in a different place. I review my weaknesses. I remind myself that it's always uncertain, that I have no control over anything that happens here except what I do. My plan. If I take stops and have a losing day, we all have losing days, and I followed my plan, then it was a good day. It wasn't a profitable day, but it was a good day because I only stay in business if I follow my plan. If I go off my plan and start making it up, I'm on my way out of business. And it doesn't matter if I have no trade here, I make it up and I make 5, 10, 20 points. In fact, getting paid for doing that is a license for disaster because now you've had reinforcement for behavior that'll take you out of the business. Everybody has winning trades, by the way. The best losing traders on the planet, and I couldn't give you a number of how many retail traders are out of business. And we know the statistics are horrendous for retail traders because they all do the same thing. They've all had winning trades. So why are they out of business? Because they didn't have an edge. They didn't understand the business they're in. They thought it was a video game. I'm going to suggest that if you're having that kind of experience, that maybe you change your plan. Unless, of course, you're getting rewarded and you're doing your thing and it's all good, then don't change it. But if it's not working, Einstein's definition of insanity was, keep doing the same thing that doesn't work. I was insane because I thought it was persistence and adjustment and tuning. I didn't understand early on because there was nobody for me to talk to. There was no internet. There were even no computers. So when I started out, it was like in a vacuum. So I thought I was doing the right thing because of measured moves. I thought trading was a predictive business. It's going to go here. It's going to go there. It's going to do this. Oh, I got a head and shoulders. It's, whatever. All that stuff. So that's where I learned. I learned classical bar charting at the CME. So that's where I started in 1980. So I was clueless, but I thought that was the answer because that's, hey, it's at the Merc. They must know what they're doing. Yeah. Well, looking back, I'm sure they know what they were doing. I just didn't understand the business. Remember, this is a target. So this is a short. I would be taking this short, the risk neutral, then watch it right here. And you could be out of the trade here, or you're managing the trade behind the structure right here. So too high, sellers, stop is here, risk neutral, chop chop here at the volume, break low, stop can be here. Target is this. You see, this is what you need to know before the fact. Now, if I take this trade and I just take it from here down to here, I'm okay with that. I'm not going to, just bingo bango. What would this trade be worth? Well, let's just say 76 to, 69, 7, 8 points, and then you have a 2 lot on, so maybe you have 8, 10 points out of it. How many of those do you need? I don't know. Me? Whatever the market offers and aligns with my plan, this is a short. Down here, where the buyers were, why might you take profits here? Because the buyers were here. We come under, we test the buyers. What do? Reverse. Time to get out of Dodge. This is how you could use this. The order flow was telling us right here we had our buyers. And the fact is, you come down here, I still got more icebergs going off. I break high. This is your support right here. I mean, you could be out of this wherever you want. It's up to you. Does that make sense? Kiloton, Stottlemyre on market. Yeah, he taught me market profile but it was mid 80s. And the book I have was, gee whiz, I don't think that's it. Let me see if I can find it. Where is it? Market Logic or something. It was his first book because I went to what he called the Market Logic School that he had, and I think I did that in 1986 or something. I don't remember. You know, things get a little hazy if you know. So this trade is over. There's nothing going on right now. So now, and look where we are. Now that doesn't mean we won't go lower. Okay, there's no way to know. But these are levels that are created by the volume profile, intermediate time frame. So I know when I'm in this thing where it might go. I have no idea where it will go. Now we do have a couple other things to consider here. This is our outside edge out here. The other thing is out here are stops. So you always got to look left. Above this is stops. So this is where we're looking to go. We also have out here. So you notice we're right up in here. So we want to watch this be here. I cannot get short because of the buy stops. So now I want the shorts to come out. Write this down. The market goes up to go down. The market goes down to go up. And by the way, please give a thumb up if you're visiting in YouTube. Also use the link in the bottom of YouTube if you want to access the Bookmap Discord Trader Lab community. There are 60 PDFs of these structured trades you can download, reverse engineer. Also a library of webinars on this process, some up to 5 hours long of real-time narration, you know, rocking it out, showing you a lot of microstructure, triggers, and alignment. Where's our stops? Outside edge. So let's just watch this. Not a recommendation. We're just, see, outside edge. So now you want to look at this. I don't call trades. I can take my stops as good as you. So what happened here? Buy stops. Now remember where the swing high is, right? This is what you got to be aware of. It's here. So out here is my outside edge. Did I take it out? Because the stops are at my outside edge. It's out here. So now I want to watch because if I don't get buying above here, then I can mean revert. So this is a tricky location. You'd have to be really anticipating it. There's the outside edge. Remember how the market works. It tends to come out, pop the outside edges. I said this earlier in the stream, right? And you guys can watch this stream again. It will be up on YouTube, and you can enjoy yourself with that. And please give a thumb up if you're visiting in YouTube. And remember, you need to verify your subscription to Bookmap if you have one, or download the digital version. There's no cost for that. There's no cost to visit Trader Lab. These streams are going to be done live in the Bookmap Discord Trader Lab starting on Thursday. That'll be exclusive content. The first part will be in YouTube, and then the rest of it will be narrated in the Bookmap Discord Trader Lab exclusively. You need to verify your email in order to visit the Trader Lab and have access to the materials, the library, and all the additional education that's available at no cost. So I appreciate if you guys would do that. I know we all have other things we'd rather do, but this is to protect the community in the Bookmap server from the scammers and spammers and, you know, all that other stuff, right? You guys know all about that. I mean, it's very flattering when I have somebody impersonate me in the Trader Lab. Any final questions? I got about 5 minutes. Please give a thumb up in YouTube. Remember, this stream's available exclusively to Bookmap Discord Trader Lab participants. For lot, Tony, This isn't two lot, Tony, is it? In this context, do I rely more on low volume nodes and mean reversion? They're the same. When you're mentioning VWAP, we have a structured trade called VWAP to VPOC. Now the VWAP is quite a bit above. So, but that's here to here. That is a structured trade in the Trader Lab. It will also be at an outside edge. That is a trade I would take if everything, lines up. In the meantime, and by the way, let's look at the structure. Notice the low volume, and then we're looking for this. And the VPOC, or the high volume node, is in the middle. It's a mean reversion trade. Now, when I'm in a lower distribution like this is an outside edge. It is a mean reversion. It's the same. I'm just in this fractal, in this distribution versus out in this one. So I can do it from there with the VWAP, which I like, or the same fractal. It's the same behavior in a fractal. So it's outside, back to the high volume, back to here. That's what this trade would be. So this sets up your short, not a recommendation. And then you're trying to come back to the high volume, which is over in here. It's the same structure, not a recommendation. But you can see the logic of it, can't you? This is how the profile, I think, is so cool, because you can isolate behavior once you understand what it represents. And this is what we do in the Trader Lab. This is a short. Remember, we set it up before the fact, before we ever got here. It's because where's the stops? They are here. What did we do? Took the stops. Thanks for playing. We're going to send you a coupon to the buffet. And then you have your micro high volume structure here. You have a trigger. You know where the high volume is. It's here. Where's your support? It's there. That high volume, which is there. So if you're getting short, you got to be aware of this. And this might not have range. That's up to you. This is the structure. The thing in Trader Lab is you need to understand how the market works. And you may have a trade here or not if you can get risk neutral. Job number one is to get risk neutral. Now, if we come out past here, then we're looking at this. So that's what I know. And that's about as much as I know. Then it's either going to, remember what happened here. They were absorbed. These buyers were absorbed. There's the icebergs. What happened to these buyers? Sellers were there. They were absorbed. So if I get short, my stop is right above here. And because if we take these guys out and this guy's out, we're going to squeeze further. If not, we're headed this way. That's all I know. And now it's just put the trade on, put your helmet on, trade management, and go from there. Is everybody tracking? Please give a thumb up if you're visiting in YouTube. Remember, this stream's available exclusively for Bookmap Discord Trader Lab participants. Click on the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab. Say hi. It's a community of like-minded traders who've come together to leverage their collective experience. It's a community. It's about building out the business of trading, creating careers. If that's your interest, come over to Trader Lab. There is no cost. You do need to verify your email so you can be in the Discord server. And remember, starting Thursday, this stream will be delivered here for about an hour in YouTube, and then it'll be in the Bookmap Discord Trader Lab exclusively for those of you who have registered and verified your email. Thanks again, guys. Appreciate you visiting Trader Lab today. Sorry for the late start. We had some things going on here. Look forward to seeing you tomorrow at the regular time. Thanks again, guys, and please register. And remember, if you're interested in these PDFs, you can. Here's our short. It's still percolating. Don't you like that when they work? Not all of them do. They never will. Verify your subscription, guys. And if you want, go to bookmap.com. You can get a free digital subscription, and you're going to want to have that for further education. And it's going to be available exclusively to Bookmap subscribers, and there's no cost for that subscription. Thanks, everybody, for visiting Trader Lab. Look forward to seeing you tomorrow at the regular time, 11:30 Eastern Standard Time tomorrow. Thanks again, guys. And please leave a thumb up on the way out in YouTube. It helps the stream.